Joining us now to give her investment strategy heading into fall, Hightower Advisors Chief Investment Strategist and CNBC contributor Stephanie Link. Steph, good morning.
Good morning, Mike. How are you?
All right. I know you don't manage money by the calendar, but we have to be aware of the tendencies, I guess. So September, the worst month historically. On the other hand, you see a lot of the work that says when the market has been up, let's say 10% plus into September, September is not as scary based on, past patterns. So be that as it may, how do you think the market is set up right here? We were up 2.5% in the S&P last week and really down less than 2% for the full month of August.
I wouldn't be surprised if September is volatile. It usually is. But I think the economy has been much stronger than expected. I think earnings are actually troughing, and the market broadening out is actually quite healthy. So I would use the volatility, Mike, to be picking up some stocks and sectors that are not technology to diversify my portfolio.
Yeah, actually interesting that during the course so far of the third quarter, so the first 2 months of the quarter, we have seen consensus estimates go up for the first time in quite a while intra-quarter. So that's, I guess, a positive sign. Even during the pullback in August, as you know, Steph, the cyclical parts of the market didn't really buckle. They outperformed defensive, so reflecting perhaps some of that underlying strength in the economy. I know you are kind of tilting in that direction already. Energy, industrials, do they still seem like the place you want to concentrate?
I think so. That's where I'm overweight. I have been overweight all year long, but I have been adding to energy. Just a couple of weeks ago, I added to Chevron, which was down 12%, and it still is down to about 12% on the year. And it trades at 12 times earnings, and it gives you almost a 4% yield. So I think there are some opportunities still, even though energy has had a nice run, there are still some opportunities there. Anything tied on the industrial side, anything tied to aviation is actually on fire. And obviously onshoring has been a theme as well. So Boeing and GE on the aviation side and free cash flow generation are still very attractive. And Ingersoll Rand on the onshoring side, and they're all still pretty attractive, Mike. So I think you can put money to work. Again, if we do get a volatile September, those are the areas that I would be buying.
Overnight, we got some pretty weak economic numbers out of Europe. The purchasing managers' indexes were revised even lower. It seems like there's a bit of a struggle there in terms of getting growth going, even with inflation higher. People have been worried about China exposure for various U.S. companies as well. Does any of that come together for you to give you pause about, earnings power in those types of companies that are exposed?
Certainly Europe, the growth there is very sluggish. I think China, I think they're going to continue to stimulate there. And so I do think that at least on the consumer side within China, that's where I have exposure, because I think you have that pent-up demand from being closed for 3 years, and you have that reopening theme that really hasn't played out that much just yet. But we are hearing from some companies, some consumer companies that have exposure to the consumer in China. They're starting to do pretty well. So that's the area where I want to be exposed. You look at something like Estee Lauder, still down substantially this year. You look at Nike, you look at Starbucks. There's a lot of companies there that I think you can have exposure to, but you have to be patient because it's taking a little bit longer than expected to see that recovery.